Hi, we are in a new chapter, issue of shares, where we will learn to solve sums by passing journal entries for the issue of shares. In this particular video, we will have a look at introduction to joint stock company. Joint stock company is regulated by the Companies Act of 2013. We'll begin with the definition of joint stock company as per the Companies Act 2013. We will have a look at the features of joint stock company and also have a look at the kinds of companies. Let's begin with the definition of a joint stock company. As per section 220 of the Companies Act 2013, company means a company incorporated under this act or any previous company law. Next, let's look at the features of a joint stock company. Characteristics or features of a company. Incorporation. A company is an artificial person created by the process of law, which means it's created through the Companies Act. It could be either the Companies Act of 2013 or any other previous Companies Act. A company is a separate legal entity. It is so because it's an artificial person having a separate legal entity from its shareholders or members. The company is a separate legal entity apart from the shareholders or members of the company. Third feature, it's an artificial person. A company is an artificial person in the eyes of the law, and therefore it can enter into contracts, conduct business, it can be sued for its debts and actions, and can also sue others for its debts and actions. Fourth feature, perpetual succession. The existence of the company is not affected by the death, lunacy, bankruptcy, etc. of members or shareholders. The company can come to an end only by winding up through the process of law. Fifth feature, limited liability. The liability of the members of the company is limited to the value of shares subscribed by them or the amount guaranteed to be paid at the time of winding up of the company in the case of companies limited by guarantee. However, in the case of companies with unlimited liabilities, the liability of the members is unlimited, which means the private property of the members can be used to pay off the company's debts at the time of winding up of the company. This happens in the case of a company incorporated with unlimited liability. Next feature, transferability of shares. Shares of a company are freely transferable except in the case of a private company, where the transfer of shares is regulated by the Articles of Association of the company. Next feature, management and ownership. The company is not managed by all the members of the shareholders. Instead, it is managed by elected representatives called directors. Hence, the management of a company and the ownership of the company are separate. Ownership, the company is owned by the shareholders or members, whereas the management of the company is done by elected representatives called directors. Common seal, final feature. A company may or may not have a common seal. If it has a common seal, it has to be affixed on all important documents of the company. So we just had a look at the characteristics or features of a joint stock company. Next, let's have a look at the kinds of companies. Kinds of companies. There are three kinds of companies. First one-person company. Second, private company. And third, public company. We will see each of these kinds of companies in detail. We'll begin with one-person company. A one-person company has only one person as its member. And this one person has to be a natural person, being an Indian citizen and resident of India. Let's go to private company. In the case of private company, the minimum number of members is 2 and the maximum is 200 members. In the case of a private company, as we saw earlier, the right to transfer of shares is restricted by its articles of association. A private company cannot invite the public to subscribe for any of the securities of the company. And finally, the name of a private company should end with the words private limited. And finally, let's go to public company. A public company is defined as a company which is not a private company. The minimum number of members is 7 and maximum is unlimited. A public company can raise capital by issue of shares to the public for subscription, and the name of a public company should end with the words limited. We saw the kinds of companies. It can be a one-person company, a private company, or a public company. Let's see the different kinds of companies based on guarantee. A private or public company may be a limited liability company or a company limited by shares, or an unlimited liability company, or a company limited by guarantee. Let's begin with limited liability company. In the case of a limited liability company, it refers to a company where the liability of its members is limited by the memorandum of association to the amount, if any, unpaid on the shares which is held by the member. So only to the extent of the amount which is unpaid by the member on the shares which is held by that specific member, only to that extent his liability is there. Beyond that, the personal property of the member cannot be used to pay off the company's debts. In the case of an unlimited liability company, it refers to a company where the liability of its members is unlimited, which means in the event of winding up of the company, the debts of the company will be met by the private property of the members. Finally, company limited by guarantee. It refers to a company where the liability of its members is limited by the memorandum to such amount as the members may respectively undertake to contribute to the assets of the company at the time of winding up. So to the extent that the member has agreed, as stated in the Memorandum of Association, to contribute at the time of winding up of the company, to that extent, his liability will be limited. So in this short video, we saw an introduction to joint stock company, the definition as per the Companies Act 2013, features of the joint stock company, the kinds of company, and also the company's kinds, which is based on guarantee. In the upcoming video, we will have a look at the stages in the formation or incorporation of a joint stock company.